Good morning, ladies and gents, and welcome, as always, to TradeGate Hub morning market update with myself, Eliman Dambell, and thank you for taking the time to attend this session here this morning. And before we do get started, as always, just please make sure that you somewhat read the description, of course, for the risk warning. Now, as far as today, guys, is going to be, of course, a 30-minute session, as always. But there's a lot to get through. Of course, we know today we will see the FOMC somewhat you have the Fed meeting later on today. Yesterday, we had US retail sales. Of course, we had inflation numbers coming out of the UK earlier on this morning. There is quite a lot taking place, transpiring. You have the economic outlook from the Fed as well as press conference from your man, Jerome Powell. So there's quite a lot as far as taking place in the markets. And of course, at the moment, we are seeing some uncertainty. And starting off with gold, looking at XAU USD, what we can see, of course, over the last 3-4 days, well, the last 3 days, I would say you have seen prices in the metal, in the safe haven, somewhat fall from around 1903, of course, now trading somewhere just above the mid 1800s. You see gold currently trading at 1860. Yesterday, we did see a drop to an intraday low of around 1849, 1850, just on the news that, of course, retail sales in the US and the United States did somewhat come in below expectations. Now, with retail sales, of course, we know this currently contributes to around two-thirds of the US economy. So yesterday's disappointing figures should have had more of an impact than they did as far as the price of gold. And actually look intraday. Let's look intraday. Let's go to a 1 hour time frame so we can just see what took place yesterday. Of course, you could see during the time numbers came out, you saw the fall which took place, taking us to that intraday low. But of course, historically, over the past few days, we've seen that level, 1850, has acted as a floor, acted as support. So we've seen the bulls rallying at that level quite a few times, hence the reason why we saw markets climb there on a few occasions, even though it attempted to break out. And it's two things. Firstly, from a technical perspective, yes, it was a flaw. Historical bulls do live at that area, but also I believe the markets just want to consolidate until later on today. So I believe today we may see a move depending on how the Fed choose to move. Of course, interest rates, you are expecting those to be unchanged. We may not see too much movement from that perspective. But what are they going to do with QE? What's the situation with helicopter money? What are we, I don't know, projecting as far as the economic outlook in the US? Are they going to revise their growth estimates? Are we going to see the potential for rates to be hiked sooner? Of course, the Fed have been targeting a 2% inflation rate before they choose to move next in terms of rate, and they were hoping to do this, I believe, by March of next year. But however, could their hand be somewhat forced? We see oil prices rising to multi-year highs, which we will get to in a sec. So there's a lot happening, a lot of questions, as you've seen, we have just asked. So I think the markets, again, are waiting for those answers, and hopefully we can get some later on. And if we do, there's two things I'm potentially looking at as far as XAU USD, as far as gold. Look at the moving averages, how they are currently positioned. Yes, you do, and we are in a position where you do see historical buying take place. For me, in a way, you could say, why am I selling in that area? And I'll show you why in a sec. But generally, you do have, it's a lot of uncertainty. So ideally, this wasn't a place for a pending order. It's a case of saying, can we see a move like this? Can we see the momentum continue downwards? Can we see a descending triangle somewhat form, taking us towards 1820, which seems to be the next floor after the markets hit, I don't know, 1815 there. So these are the questions in which we hope to be answered later on. And of course, you can see it a bit clearer in this instance there. If I just zoom in, are we heading to that floor? Are we heading to 1820? I'll probably have to come back to this trade outside of the session, because ideally this is a place where you wait for confirmation. You want to wait for confirmation. Looking at the RSI, currently it hit that floor of 44. I was hoping it would break out of that floor. Of course, now you can see it's rallied back to around 47.5. So if this starts to head to, let's say, 48, 49, that may be a sign to potentially leave before it gets to the 50s, because that could potentially suggest we are heading back into the 1900s, if it is able to breach that 1872 level. So we will see later on potential bulls, potential bears on either side. I think we're just waiting to see which way the momentum turns, and I think especially the press conference thereafter, because we expect the decision to we expect what the decision will be. I believe it's more a case of what will be said as far as the state of the economy, and will there be any, I don't know, points of contention as far as the markets are concerned from the FOMC later on. So that was the main headline for today. Of course, in staying pretty much in the US, moving on to the S&P 500, of course. Guys, what did we say? The last time we had a session, we said the S&P 500, no ifs, ands, buts, or maybes, was going to record a new high, and we just weren't sure when that was going to be. And we saw multiple record highs take place this week since then. But even in those record highs, we haven't really seen a sustained sustained pressure from those ACHs. We are seeing consolidation. The markets are rising, but rising with caution. They are moving, but moving with caution, moving with somewhat consolidation. So even though we are seeing these ATHs, and we may even see another one again later on today, and this is why gold has been declining as well. So if you notice this, we've seen the last few days gold prices have been declining. In the same time, we see the S&P 500 has been increasing in value, has been recording new highs. And if you look at the dollar, we see the dollar for the most part was, of course, consolidating, but also falling. You had 3 days of substantial falls. The dollar moved to an intraday low yesterday, close to 1.39. So you are seeing a stronger dollar, of course, leading to a stronger S&P 500, the benchmark index in the US. And of course, you see investors as a result flocking into equities, flocking into the indices, and somewhat moving away from the safe havens. So it's an interesting story, just looking at the correlation between those three markets. But just to quickly go back into the S&P before I'm going to look at cable a bit more in a sec. But the S&P, the question is now, what next? If you look at where we are, of course, you can see the RSI is just hovering above that 59 level there. We're currently at 60. The question is this going to bounce below? Is this going to bounce at this level there? Historically, yes, you have seen some upwards moves from that level there. The question is, are we positioned for another? And if that is the case, if we do see some positive signs from the Fed, somewhat creating a stronger dollar, that could also be a catalyst for the S&P 500 just to move past this point. And for me, what I believe the S&P 500 is trying to get to, I think the S&P 500 is trying to get to 4,300. I believe we're looking potentially to head to 4,300 points for the SPX. And don't ask me why, but I think from a technical perspective, we can see all of the indications. We're currently at 60. We have resistance at around 80 for the RSI. Moving averages, you have that crossover. Look at all of the momentum. It's pointing upwards. With the S&P, what we see, it likes round numbers. It likes to hit those milestones. So 4,300, we're currently at 42, 44. Could it potentially hit that nice whole number in the next few weeks? That's what I believe. If, depending again, I think it's all a matter of momentum. The momentum for the majority of the last month, besides I would say the last few weeks, the last week or so, has been bearish. We've seen a lot of negative data coming out of the US in the month of May, starting off with NFP. But are we gonna see a reversal? We didn't see so yesterday with, I don't know, the retail sales, even though the revision for the month of April was better than expected. But are we going to start to see positive data coming in here in June, which could potentially impact prices? So that's one to definitely look forward to. Essentially, free markets in one, looking at gold and the correlation it has with the S&P. But going back into XAU USD, so if we XAU USD, GBP USD, cable as we all know it as. So depending on how the Fed essentially acts, and depending on what that means for the S&P 500, what would that mean for cable and the cable rate? You would assume this would push cable a bit lower, getting us back towards 139. The dollar has had enough of being pushed around by the G7. You saw your man Joe Biden there in St. Ives over the weekend, of course. The G7 here in the UK, essentially making acquaintances of the G7 leaders and potentially whispering in the air where we are coming back. We are coming back with a bang. I know you had 4 years of thinking things were essentially sweet, but now we are back and trying to somewhat reclaim that status as a stable superpower, of course, quote unquote, depending on what side of the aisle that you sit on. But generally, it does look like, especially if you look at the moving averages here, so not just from a fundamental perspective, technically you're looking at that downwards crossover. You're looking at the fact that that level of 50 isn't being broken as of yet. Are we going to see this attempt to drive down to around 43, which may be enough to take us back below, or to at least that floor of 139, 89 or somewhere of that nature? Of course, we saw yesterday's move attempted that run, but again, still a lot of uncertainty. Still a lot of uncertainty, which is why I believe we're waiting on the Fed once again to potentially guide us into the right direction. Again, we do see quite a lot of bears historically in that area. Let's look intraday, look at the H4 to see if there's, I don't know, any further clarity. You know, the H4, if we're being honest, it looks... So we still have the same resistance there. And if you're looking at prices, of course, you do see quite a lot of bears have essentially lived in this area. We're back at that level earlier on today in the last 4 hours, but you could see rates did not want to break past that level. They may not want to break past that level till later on this evening, and we may potentially be waiting to see what happens. Again, I keep saying the same thing. And I'm just realizing it's somewhat frustrating me myself. But guys, we're all looking towards the Fed meeting later on. We're all anticipating. This is probably one of the most highly anticipated Fed meetings for a while. So I will say, for those of you who are trading today, do keep an eye out on what is happening as far as TradeGate Hub. Pardon me. Do keep an eye out. It's hard having hay fever every morning. You wake up, your eyes are teary, your nose is somewhat drippy. It's a very, very hard life indeed for those of us in the summer who suffer from hay fever. And please send me your condolences. But in relation to this, it just... have a look at TradeGate Hub. I'm very interested to see how Dale and Mike V look at this later on, as far as what they believe the potential impact of this Fed meeting may have on markets. But it will be very, very interesting to pay attention to what's going on and how it impacts us. But I personally don't believe we're going to see this break 141.20 before then. We may just see it consolidate, even similar to what it did yesterday, prior to the release of those retail sales. So we may see some consolidation, and we're either going to see, I believe, a spike up, or we may even see a false breakout, then some sell-offs. So it's interesting, a lot of opportunities there. But moving forward, so we've looked at, of course, gold, cable, and of course the S&P 500. Now moving forward to Bitcoin. Now with Bitcoin, what we have been seeing in the last few days, of course, Monday, Tuesday, we saw Bitcoin, I don't know, somewhat rise about 10%, climbing back towards the 40,000 mark. It is still at 40. You can see it's hovering. It's just trying to stay at 40,000 there. Of course, it was helped by PTJ, of course, Paul Tudor Jones, who stated that it was a great diversifier. And of course, we saw how now there's probably not been a market in which I've seen influenced by quotes from quote unquote highly respected, I don't know, personalities in a business or investment sense, as I have seen with Bitcoin. Can anyone think of any other? Can anyone think of any other market in recent times which has been so dependent on the words of certain individuals to find you could say the Fed is, but besides that, you're looking at people like Elon Musk. You're looking at people like Cathie Wood and things of that nature. You're looking at people like now Paul Tudor Jones, and whoever has somewhat of a reputation in the markets or in the world of business coming out and either endorsing or criticizing Bitcoin. We are seeing somewhat of a rise or a fall. As far as the rise now, clearly this is not attempting to, how would I phrase this? We're still in consolidation, even with the rise, even with, it could have been anyone. It could have been me who came out and said it. Bitcoin was not going to pass this level there. We've seen that consolidation. And for some reason, it's just not ready to pass that consolidation there of around 41,500. Let's say you're looking somewhere around there, even going to, let's say, 42,500. Let's say looking at that historical high. For some reason, it's just not ready. For some reason, I don't know what it is, but it seems BTC USD prices are just not ready to breach that point. Look at the volume as well, consolidation. I think it's waiting to see how. Let's just see there. You do have, if I can even bring this down a bit further there, you do have that resistance there, and that's pretty much where we are now. Resistance of around 49. Of course, you have a higher high as far as or a higher level of resistance there at 54.55, but 49 also has acted as somewhat of a resistance in the past, and it's a case of if it can pass 49, will it get to 54? And if it gets to 54, I believe you're probably just looking at prices just somewhere around there, just in the periphery of breaking that resistance, but still not breaking that resistance. So really, until we see RSI above 55, I believe this consolidation will continue. Looking at the moving averages, yes, it is positioned for that upwards crossover. Of course, Elon Musk came out and said that there is a possibility. There is a possibility. What did your man say again? He says there's a possibility that Tesla could accept BTC USD in the future from a perspective of transitions and things of that nature. But however, how would I put this, ladies and gents? We don't know, and to be honest, we shouldn't care. We don't know if that's the case, and we should not care. We should not, from an investment perspective, I don't know, Google alerts to any time your man speaks and buy or sell based on his words. We need to do the work. And as far as doing the work, clearly what we can see, if you are bullish, you're probably waiting above that level there. We've seen those historical buys which have taken place at that level. If you are bullish, you probably already have a pending order above 43K. However, it's very hard to say when those bulls will be rewarded. It's very, very hard to say. Look at the other side. It's been pretty much 2 months since we've seen markets really trade above these levels there from a volume perspective. So until we see the volume really start to pick up, momentum really start to pick up, which probably will be coming from institutional investors, we may just continue to see Bitcoin hover between 30 and 40k. I would say that 10k, 12k range, 42 if you're kind, will probably be where we see BTC USD trading. Crude oil. I always like to say crude oil every time I look. Guys, crude oil is hitting $75 a barrel. Crude oil is heading to $75 a barrel. I have no doubts about this. I'll cut my hands off if I'm incorrect. I will cut my hand. We can live stream it on TradeGate Hub. Eliman Dambell cutting his hand off if crude oil, WTI crude, does not reach $75 a barrel. I didn't say when, so I'm giving myself a bit of an out there. But generally, just from the momentum perspective, just hear me out. We have that resistance there of around 67, and this is a monthly time frame. We're currently at 64. We've just seen the upwards crossover as far as momentum. Historically, that clearly is that next resistance level. All of the signs from a technical aspects are pointing. Guys, just bear with me 1 second. I hate to do this. I'm just being frustrated here as far as these symptoms from my hay fever. I just need to somewhat. Just give me 2 seconds here. Okay, great stuff. Yeah, I don't know. His hay fever is absolutely atrocious. Sometimes you start to get a runny nose, and it's really not it's a compromising position, especially when you're trying to do a webinar. But back to crude oil and me potentially cutting my hands off. How this is currently positioned, clearly we see what it is trying to do. We see what it is trying to do, where it is trying to get to. And the second it gets to there, we've seen what happened the last time it reached that point, the last 2 times it reached that point. Historically as well, we've seen what happened at that area. I beg your pardon? Oh my, but generally it does look, just look at this, it does look like it is attempting to make the acquaintance of $75. And of course, at the moment, what we are seeing in the world of energy is, of course, OPEC is continuing to reopen the supply, but demand is just too high. There's just too great of demand. Demand is outweighing supply at the moment, in the short term at least. OPEC Plus and its allies, of course, which includes Russia, do not meet until July. I believe it's the 1st of July, when OPEC Plus will reconvene. We had a meeting there a few weeks ago where they decided to increase production to around 2.1 million barrels per day. What will they do in July? I think that's the question. But in the short term, we are seeing, I think this, what are we today? Wednesday. Thursday, we're going to see crude oil inventories come out. And depending on inventory, is it today? Let me have a look. I think inventories may even be coming out today. But as we were saying earlier on, as far as inflation in the US, we are seeing energy prices, of course, is a huge contributor of this. So if we continue to see this situation, will the Fed even try and get involved from that perspective as well? When are we seeing? Bear with me there a sec. It's today or tomorrow. For some reason, I don't know why. It doesn't show on some of the economics calendars I use, but we are going to see weekly crude oil inventories by the EIA out either today or tomorrow. So do keep an eye out on this. But recent weeks have seen crude oil prices, crude oil inventories fall. You're seeing, I don't know, somewhat of a shortage of supply and a rise in demand. So that is just simply a cocktail for higher prices, nothing else. The question is, how long will that last? Will crude oil inventories be lower, or are we essentially setting ourselves up for a bear trap? Where it looks like everything's sweet, everything's rallying. The markets here have risen pretty much consecutively, a consecutive high, 17 consecutive highs in a row. It's been a very, very long time since we've seen this, especially considering literally a year ago today, crude oil prices were trading below $35 a barrel. We're double that level at 12 months later. But I believe the party isn't over. I still believe the party isn't over. We may see this continue at least for another $3 and around 70 cents or so before we get that resistance, or even probably more if it is aiming for 83 on a daily time frame. As far as the RSI, we're currently 10 points away from that level. So that could be where the next stop is, and you would assume that may even be close to 80. I read somewhere yesterday, someone from UBS was saying that they believe the range for the rest of the year, as far as crude oil, will be $70 to $80 per barrel. So we may even be heading to $80. So it's just definitely an interesting one to keep an eye out on. And just to leave you with one for today, the final one for today, of course, the FTSE 100. Yesterday we saw numbers coming out of the UK suggesting that in the month of May, the United Kingdom, Britain, recorded its highest ever monthly rise in employment. We saw around 197,000 people added to the payrolls of companies last month, highest ever since that particular record began in 2014. So you are seeing positivity from the UK, and of course we've seen how this has somewhat impacted the FTSE 100 rising. But of course today, and this is where it gets interesting, the inflation numbers which came out from the UK today, monthly and annually, are both over 2%. The Fed were targeting 2%. I think even the BOE was targeting, pretty much the majority of central banks across the globe were targeting a 2% interest rate before they started to look at increasing inflation rate before they started to look at increasing interest rates. If that trend continues, because remember, later on we have the Bank of Canada also, or the Canadian inflation numbers coming out as well. We have the Bank of Japan as well speaking later, coming to their interest rate decision later on this week as well. It will be interesting. It will be interesting not only to hear from the Fed, but to hear from the others, hear from the BOJ, get an update from the BOE, see what happens with the BOC in Canada and a few other areas of that. Are we going to start to see before it was whispers, but are we going to start to hear some screams as far as what will be happening in relation to interest rates? I believe we are going to see some adjustments, not now, but as far as their statements saying 2022, I think we may see that start to get out the way. The higher the situation with inflation continues to rise, I think we are going to start to hear more calls from the likes of Janet Yellen, Treasury Secretary, who a few months ago forecasted this, saying that the Fed may have to take action sooner than expected. Those calls may start to increase from a political level, and I think once the policymakers get involved, it becomes harder for the central banks to maintain their stance, and they have to somewhat adjust. But again, guys, these are all hypotheticals. These are all wait and sees. And as far as waiting and seeing, where better place is there than TradeGate Hub for you to wait and see, for you to, of course, look at the markets, look at the traders like Mike V, like Dale, like myself, like Gil Mayer, and a few others who are very, very elite at what they do on the platform. So do keep an eye out on what is happening on TGH. We will potentially help answer some of these questions for you as far as what the state of the markets could be, depending on some of these upcoming news event. So guys, absolutely great session. Thank you again. The next session will be available for you on Friday. Until then, I will leave you to it. Enjoy the rest of your day and happy hunting, to quote the coach, Dale himself. All the best. Take care. Bye-bye.